What's up, everybody? Welcome to the Financial Tip of the Month brought to you by F3 Capital. My name's Nathan Fox. I'm a financial advisor and I'm the founder and managing partner of F3 Capital. Welcome to the Tip of the Month. I'm going to share with you today some exciting topics and really in particular what I find is the most important reason people work with an advisor or one of the most important things in people's life when they consider finance. And that's achieving financial independence. It's not easy. A lot of people out there spend their entire lives and never get there. But the people that are able to achieve true financial independence are able to spend more time with their families. They're able to be more philanthropic. They're able to live life more on their terms. And over a decade and a half of practicing, I have never run across somebody who doesn't want to be financially independent. You know, it doesn't mean that you want to be like Scrooge McDuck and just swimming in money and being all selfish, but the purpose behind financial independence is so that you can spend more time with your family, be a better wife, be a better husband, be a better parent, spend more time on the things that you truly enjoy. And for me as a new parent with a newborn, every minute I spend out working, and I really do love what I do, but every minute I can spend more with him is important to me. So everybody out there who's working and earning a living, you know, I think if you're going to earn that money and bring that money into you and have money flow to you, let's take it as seriously as possible and let's deploy the optimal financial solutions to your life so that you can live life exactly how you want financially. Now, there are 3 rules and 3 core concepts that I have found that nearly everybody who's financially independent is deploying. And I named my company after these 3 core concepts. They stand for the flow, the fund, and the force of your money. And as I'll get into it, I'll break down each and every one. The first one, most people are very familiar with. Most people understand that they need to earn some type of income and they have to have money flowing to them to be able to even think about, living in this society. So we call that cash flow. Cash flow comes in many forms. It can come in a job, wage income. It can come from a pension. It can come from a portfolio. It can come from real estate. It can come from royalties in a business. There are multiple ways, and really successful people will have multiple flows of money. But really what we have to start with before we can really begin to maximize your financial potential is understand what that flow is. If it's in the form of a job, how much is coming in per month, and where exactly to the penny is it going? Not just where we think it might be going with a guess, but being able to track it, as I mentioned, to the very cent. And the beauty of being able to do this is there are wonderful tools, softwares, and programs out there that we really don't have to spend much time on tracking our cash flow. So when we have money coming in, a test I'll often do with clients is I'll ask them, I'll say, hey, can you pull up and show me exactly where every penny went last month? Right? This is what high-end corporations do and what really successful businesses do. They know where their money's going. And as an individual, we want to treat ourselves like a corporation. You're the CEO. You have a cash flow. Let's make sure that that flow of that money, the first F, right? I named F3 Capital for the flow, the fund, and the force. And that first F is maximizing that cash flow, understanding where it's going, tracking it so now that we can deploy it and move into the next 2 Fs. The next F being the fund, the emergency fund of your money. This kind of sounds obvious. We need to have liquidity behind our wealth. We can't just be living paycheck to paycheck if we can prevent it. We want to be able to build up a safety net. Now, one of the benefits right now of having a high interest rate environment is we can now invest that safety net with higher rates than ever possible, or at least rather rates that haven't been possible since prior to 2008. Now we can get 4% in some bank accounts. T-bonds are hovering at 5%. And this allows now the emergency fund to function with its 2 rules. Number 1, we want to get the optimal rate of return, the highest possible rate of return possible without sacrificing principal dollars. Highest rate possible without sacrificing principal dollars. Now, the amount that we want in our emergency fund will depend based upon our individual circumstances. It could be anywhere from 3 to 6 months worth of living expenses all the way up to multiple years. Depends if you're in retirement, depends really what your responsibilities are as an individual. And I'll do another video on going into very much a lot of detail on the emergency fund. But for now, optimal rate of return that's guaranteed without sacrificing principal, and building up maybe 3 months to maybe multiple years of liquidity on hand. The last F is the force of your money. Now, with the force of your money, it is called the force for 2 reasons. Number 1, we want to force money out from the cash flow that we have every month into a bucket approach. And the 3-bucket approach that we take is investing short, intermediate, and long term. Right? So when we take that approach, we also want to have different tax diversification with each and every one of those buckets. We want to have different investment diversification, spreading it around. This can be real estate, more in the longer term. It can be equities, more in the longer term. We can look at bonds. We can look at a number of different investments out there that allow people to have short, intermediate, long-term investments and to utilize that analysis of that cash flow to force money out on a monthly basis, annual basis into each and every one of these buckets to create real force behind your money. You know, in the long term, in the bucket approach here, in the long term one, this is where we want to be in equities, real estate, things that can get us 7, 8, 9, 10% plus returns. That's not always guaranteed, but historically speaking, that's what we want to shoot for. In the intermediate, right, this will be really something from like 3 to 7 years, right? And 7 years plus being the long-term bucket. And then short-term, you know, money that we might need to turn to after our fund bucket, our emergency bucket in the shorter term, or money that we're going to live off of or need in the next 1 to 3. So again, to conclude, F3 Capital builds into the 3 core principles of wealth planning: flow, fund, force. If you've been watching this and you've been thinking to yourself, maybe you're not doing a good enough job, or maybe you're just unsure if you truly are maximizing any 1 to 3 of these buckets, from your cash flow analysis to your emergency fund to the force of your money, I'm going to put a link up here in a minute for a complimentary, what we call a financial wellness check. You click the link, you go in, you tell us your information. Our team does a complimentary analysis for you. There's no sales gimmicks, there's no fees to it. We simply do the analysis and then show you the exact ways in which you can improve each and every one of these areas. If you want to work with us after that, that's up to you, but the analysis is complimentary, and take advantage. Don't just let this video be another good topic or, oh yeah, that sounds great, and then do nothing, because the real path to financial independence isn't overnight. We want to build a lifestyle and build your life around being able to maximize that potential so you can spend more time with your family, more time on your hobbies, and have more peace of mind knowing that you truly are financially independent. Please stay tuned for more tips of the month from F3 Capital. I look forward to sharing more with you.